Hello, friends. Mortgage Mark here. Let's talk about this week. And we're going to go fast because there's a lot of data, but I'm not going to go into it. So it should be relatively quick. I'll pause for a second so you guys can look at it, but I'm not going to bore you too much. At least I don't think so. We'll see. So let's hop in. You like that intro? Rates, guys, per investorpedia.com, they're sitting at 6.8. So I do think rates have come down a little bit since that probably got posted, although I did just grab it off the internet today. But I say that because you guys can see here in the chart, remember green is good. We've had a nice little run here. I think we're locking folks up right now. I think this is about as good as we're going to see for the immediate future. I think the Fed's going to meet next week. They'll raise 25 basis points. We'll see. I think that's already baked in the cake. So I don't think there's going to be a ton of movement, but May 10th, that's what we've been saying for months, I think is going to be the big movement. So May 10th, I'm hoping we break above this and start running, getting back to lower, better rates. Biggest news in the mortgage world right now, Fannie and Freddie, or the government really, they're going to come and put basically a tax on people with good credit. It doesn't make sense, but that's what they're doing. So anybody can Google this. I show clients when they call Fannie Mae LLPA, loan level price adjusters or adjustments. And so if you guys look here, if you really care, you can see like, oh, here's your credit score. You're putting this much down. That's how much Fannie and Freddie are going to tag onto the rate. So that's part of what makes up somebody's rate. And if it's an investment property, scroll down to the bottom part of the chart and you can see investment property, this loan to value, that in addition to it's already being charged up top, they charge that as well. So I don't want you to get lost in these details. However, here's, the reality is they're charging, again, these are the details. You guys can look at it. You push pause if you want, but I'm going to skip it. But basically, green means there's an improvement in pricing. Red means there's not. So if you guys look, somebody putting down, 5, 10, 15% with good credit, they're getting beat up. Look at the red. It's all right there in the middle. These are the higher credit scores. Yet, look at the very bottom rows, the 639 credit scores. Somebody under 639, their pricing is getting better. Now, look, is it better than good credit? Of course not. So you want to have better credit, but they are suddenly that gap is narrowing, right? So this gap between the great credit and the not so great credit, there was a gap that's now just gotten smaller. And the reason why is they're charging more money to the people with higher credit. It is what it is. If you don't like it, contact your congressman. So back to the inflation. Inflation is going to follow, or our rates will follow inflation. We've been saying May 10th. Again, the biggest reason, shelter cost, they're lagging. People that signed their leases a year ago, they went up 18, 20% at the time. Now they're only going up like 2.6%. And you guys can see the CPI, that's the number that's going to be coming out here on May 10th. That's the one that the Fed loves to measure inflation against. It's currently at 8.2. And when you figure that shelter is almost 40% of the cost, 43%, really, truly, inflation should be closer to about 2.5 to 3%. And that is massive. So in other words, we could already be close to achieving the Fed's goal. We just need to be patient, which is why they shouldn't raise rates, but they will. They shouldn't raise rates. They're using data that's old data, not real time, but whatever. We'll see it happen. Here's the best pictures we have. It kind of just shows the same thing. You see that yellow circle? It just shows when things take off and they're always they're driving, looking in the rearview mirror is what they're doing. So bouncing back, I had a lot of haters on a video we did on social. I didn't know this till Riley brought it up, but I got a lot of haters and that's okay, saying this is not a good time to buy. Self-serving mortgage guy. Look, guys, we're still from the all-time highs, nationwide, all-time highs. Properties are down like 2%, literally 2.3 or something like that. And properties are already coming back. There is a housing shortage. You will find that it's going to be, I think this summer is going to be a really good buying season. Rates will come down. 5.5 is a strike price for, if you're a realtor out there and you got a seller or a listing, if you're a builder, buy down the rate to 5.5%. Like last week, we told you 74% of home buyers say 5.5% is their strike price. Buy down and advertise at least a 5.5 or lower rate. So realtors, get your sellers. Pretend like you're the builder. Just say, sellers, we're going to go ahead and just do a $10,000, $20,000 buy down of rate. Advertise that rate. We can do a lock and shop, like list and lock. We can lock your rate as a seller for your potential buyer coming in the door. So call us if you want us. Here's some more stats. The McKinney Airport, I was about a decade too early on this, maybe 2 decades. About 15, 20 years ago, I said, man, McKinney's going to be the center of where it's at. And the reason being is I feel like McKinney Airport could be like the next Love Field. So here we are 15 years later. That is starting to become a thing. And I know the Fairview area, McKinney area, neighborhoods are starting to complain. So is what it is. Lastly, guys, money, you can get really good. Somebody was surprised when I told them they can get 4 or 5% on their money. Check out these CDs. A 1-year CD can get you 5%. 2, 3, 4, like stack it up, guys, where it's like you can get a 1 duration, 2 duration, 3-year, 4-year, 5-year, and you can make this money. So it is a good time to have your money invested and stay liquid for opportunities. Lastly, make sure you updated our email, mortgagemark@mortgagemark.com. Make sure you're updating that, please. And thank you. Share, subscribe, like, all that fun stuff. Let's get social. If you guys need something, let us know. We appreciate you as always. I don't know where my stop button went, so I will figure that out. But as always, guys, if you need us, we'll be around this weekend. Have a good day. Bye.